Hey there, traders, and welcome back for episode number 113 from the StockBandit.tv. Happy New Year to you. I hope 2009 was a wonderful year for you personally and in your trading. And of course, I hope that 2010 is going to be even better for you. So you're starting off here, you're in the right place. We're going to take a look at the indices here as we head not only into a brand new year of trading, but of course a brand new week starting on Monday morning. And when that opening bell rings, it's going to be the sound of opportunity, so we've got to be prepared. We've got to understand that volume should be returning in a much stronger fashion in January as people return to full speed and we see this market start to take its course for the upcoming year. Now, there will be lots of talk about the January effect, and as January goes, so goes the market. Just take a look at last year if you want further proof on whether or not that theory seems to work. I personally disregard it. What we want to do as traders is just take a look at the charts, look for the setups as they come along, and then wait for those high opportunity, low risk chances to come along to put money in the way of risk and see what takes place, and of course manage our money and our risk accordingly so that in the end we come out with a net gain, and that's the aim here. Obviously, the past 6 months at the StockBandit.com, we were able to put together 6 consecutive months of gains in our swing trades. It's been a very good stretch here, and it certainly could continue, especially as the volume comes back in and we probably see more momentum return to this market as January, February, March, April, the spring months come along. And that's really a prime time for the market to make good moves. So I'm personally very excited about what the days and weeks and months ahead will hold for us. I expect we'll see opportunity on both sides of the tape. We should see bullish and bearish setups coming along, giving us opportunities across a variety of time frames to seek out those profits. So let's take a look at the indices here as we head into a brand new week. Obviously, from the December 18th through the 28th, we saw quite a run. For the NASDAQ, that was about a 115-point run. So very nice Santa Claus rally there for the market. Things really stalled out at the end of the year. And then, of course, on New Year's Eve, we did see a little bit of profit taking. But all that did was essentially pull the market down just slightly from its highs. So all in all, the uptrends are still in effect across each of the major indices. Let's take a look at some key levels to really pay attention to in the days ahead. So for the NASDAQ, we've got the highs up here at the 2295 zone. We also have the former high at 2220, also coinciding with this yellow rising trend line here. This uptrend line has been validated a number of times just over the past several weeks. So that's really another key level. So if we do see that weakness continue that we ended 2009 on, just one day of weakness, but if we do see a little bit of a pullback here, I'm going to be looking for a test of this 2220 zone. That's a logical spot to possibly pull back to. And let's take a look at the S&P 500. We also have a rising trend line here as well, and currently that's about the 1109 zone. Now this upper end of this trading range that we just left behind, I'm outlining this for you here, but the upper end was 1113. We finished last year 1115, so we're only 2 points away. So really this 1113 to 1109, where this former resistance was, and also this rising trend line here, that's kind of the area I would expect to see some buyers possibly step in and defend this market. If they're unable to do that, which they certainly might not be able to do, if we do see some continued weakness on down through that 1113, 1109 area, then we could see some more serious profit taking kick in and bring this index a little bit deeper off of its highs up here at the 1130 zone. But for now, it's just one minor down day is all we've seen, and it's really a market that's still in very much of an uptrend. So we definitely need to respect that, but I'll definitely be looking for this volume situation to be changing in the next few days. Finally, for the Dow Jones, obviously we did back off slightly to end last year. We saw a little 120-point sell-off on Thursday. That was New Year's Eve. we are now right back to this uptrend line. Now let me zoom out here and show you just how big this uptrend line is. It goes all the way back to March of last year when this rally started. It was validated in July. It also was respected right here in early November. It was tagged and bounced from in mid-December, and now here we are ending December of 09 right above that trend line here. So this trend line right here marks the pace of the uptrend. It definitely shows us that there is an uptrend, but this trend line right here is not the uptrend. Uptrend is a series of higher highs and higher lows that are currently in place. That's going to have to change for a downtrend to emerge. We're going to need to see lower highs and lower lows. So far we don't see that, even if we did happen to see a break of this rising trend line here. But right now, this trend line, zooming back in here, this trend line is around the 10,400 area. So if we break that, we have some former support areas right here, the 10,230 neighborhood, also the 10,120 neighborhood. So we've got some key levels from recent weeks and the last couple of months to expect to see some support set in if we do see some additional selling pressure come along. However, still taking a look at these highs up here at the 10,580 area, as if we do push through those, I would expect to see more strength in this market. So those are kind of the lines in the sand to be looking at as we start a brand new week of trading. Again, I hope 2010 is wonderful for you. I look forward to many more trading videos here for you. Until then, trade like a bandit.